5 states across America are in mega housing bubbles in early 2022. What do I mean by that? Well, a mega housing bubble is one that's even bigger than the bubble that occurred in the mid-2000s and suggests that these 5 states could have even bigger housing crashes over the next several years. We're talking potentially 20, 30, even 40% price declines lined up for some of these states based on 2 key data points that I am looking at, and I'm going to reveal to you in this video the 2 key data points that I have found to be predictive of showing when a state is in a housing bubble and how much that bubble is going to crash. I'm going to reveal that to you in this video so you as a home buyer or real estate investor can make a more educated decision in 2022 and potentially avoid these 5 states that I think are going to have a very tough time in their housing market going forward. Put simply, it's going to be a bloodbath. And before talking about home prices and home values, I want to share with you that first fundamental indicator I was talking about that I think is very predictive of changes in home prices going forward. And you can see that indicator outlined on this map where we're looking at 48 states across America and their percentage change in jobs and employment since the pandemic started. And this is a very key indicator to understand because ultimately it's job growth and economic growth which fuels the local housing market. And you can see there's big differences across America in terms of the economic reaction to the pandemic. These states in red, their local economies are not doing so well. They're actually still in a jobs recession. A place like New York is probably the worst affected of all these states. Jobs are still 7.5% below their pre-pandemic level. New York State has lost nearly 750,000 jobs since the pandemic started. That is not good for the local real estate market, as I'm going to show you later in this video. Meanwhile, a state like California has lost 4.3% of its job count, which is a very big decline. California has lost about 750,000 jobs since the pandemic. What you can see here is that almost every state across America is still down on its job count, is still in a jobs recession, except for 4 states. Texas, Arizona, Utah, and Idaho are the only 4 states that have actually gotten back to and now exceeded the pre-pandemic levels of employment and jobs. And this is very important for you all to understand as a home buyer or real estate investor. It's the underlying economy in a state that's going to dictate the future direction of its housing market. And if we're adding jobs, it's going to be better for the local housing market, as I'm going to show you in 1 second, because when you have more jobs, that's more people who are demanding homes and apartments. It's simple supply and demand. You can see that outlined on this graph, the scatter plot, where we're comparing the jobs change since the pandemic. Once again, you can see most states are in negative. The 4 states that are positive are Texas, Arizona, Idaho, and Utah. We're comparing the jobs change since the pandemic, data from the Bureau of Labor Statistics, with the increase in home values over the last year, data from Zillow. And what do you see, folks? You can see a very clear trend that the better the economy is doing in terms of recovering jobs or growing jobs, the more that home prices have gone up. So for instance, in Idaho, home values are up 33% over the last year, while jobs are up 2.2%. Meanwhile, at the other end of the spectrum in New York, home values are up 14%. Yes, they're still up, but that's actually one of the worst performances in America, maybe because jobs are still down by 8% in New York. Are you guys enjoying this video? Are you excited to see the top 5 housing mega bubbles in America? If so, make sure to smash that like button. Now, if we go back to this state level map, folks, instead of looking at jobs, I am now showing you a different indicator. We are no longer looking at jobs. We're looking at the percentage change in the growth in home values over the last 12 months, because this is very important for you all to understand the parts of America that are having the biggest home price appreciation and the parts of America that are having the slowest. And you can see that if we isolate this map only to states with a 20% or more increase in value, you can see, wow, there's definitely 2 geographic areas that are dominating the U.S. housing market in terms of appreciation over the last year. It's the West Coast, Montana, Idaho, Nevada, California, Arizona, throw Texas in there, as well as the Southeast, North Carolina, South Carolina, Georgia, Florida, Tennessee. And in a second, if you stick around, I'm going to show you which of these states is in a big housing bubble, because some of these states are definitely in the top 5 of U.S. housing bubbles. But I just want to get you guys geared into what the geographic concentration of this home price appreciation looks like. Meanwhile, if we isolate states with 15% or lower appreciation, you can see, wow, it's predominantly in the Midwest. Kentucky, Illinois, Wisconsin, Iowa, Minnesota, Kansas. These are the lower home price appreciation states. Yes, they've gone up, but not nearly as much as the states on the West Coast. And really what you need to start doing if you want to understand how big a bubble your housing market is and how much prices could be going down, you need to start taking this home value increase data. How much has appreciation been? And you really need to compare it to not only jobs, as we looked at a second ago, comparing value growth to jobs, you also need to compare it to a second economic indicator that's perhaps even more important than jobs. Even more important than the number of people working in the local economy for the local housing market could be how much people are earning, how much they're paid, because that has a huge impact on what they're able to afford in terms of a down payment for a home, in terms of mortgage payments. And historically, this ratio of what people earn to what home values are can tell you whether your state, your city is in a bubble or whether it's safe and secure. We're going to get things started by looking at California, folks. I want you all to pay close attention to this graph so you can understand if California is in a big housing bubble. And we're comparing two things here. The green line, which is the typical home price across the state, data from Zillow, you can see a big crash in California from 07 to 2012, and it has more than regained value since then, up to now a record high price of $735,000. The problem is that wages, the blue line, the annual wages of the typical worker, data from the BLS, is not following suit. Yes, it's going up to $65,000, but it's not going up fast enough to justify the increase in prices. And you can see that exemplified actually by the red bars here, which is taking the typical value, dividing it by the annual wages, and giving you what I call value to earnings ratio. This is a metric I've developed at Reventure Consulting to help you figure out whether your market's in a bubble. And take a look at this, folks, for California. Back in 07, right before the last crash, that value to earnings ratio, taking the typical home price, dividing it by how much people earned, was 11.8. And this was a predictor of the impending crash that we were going to have, as it meant that locals were priced out. They couldn't afford the homes, and it made the market unstable. Now, if you look in 2021, we're back above 11x on our value to earnings ratio, 11.3. This could be a sign of another big crash coming in California. Meanwhile, let's take a look at a place like Texas, where obviously it's much more affordable than California. The typical home value today is $276,000 compared to an annual wage of $51,000. So the value to earnings in Texas is 5.4. So Texas offers a lot more affordability than California. However, it offers less affordability than it used to, and this is the concern for Texas. Historically, this value to earnings ratio in Texas was always in a range of about 3.5 to 4 over the last 15 years, and then wham. Over the last 2 years, it's gotten very, very expensive, very, very fast, meaning locals in Texas are starting to get priced out of the market. Now, interestingly, I think both California and Texas are in bubbles, but they did not make the top 5 mega bubble list. They were honorable mentions, but there's 5 states, folks, that I think are even in a bigger bubble. I'm going to reveal to you all now my top 5 mega bubble states in the U.S. housing market. These are places where you look at how much home prices have gone up. You look at how much wages have gone up. You look at jobs going up, and it doesn't make sense. These markets are clearly in a bubble. The fundamentals do not support the prices in these 5 markets, and let's get into them. I know you've been waiting for this. If you're a home buyer or real estate investor in these states, you better be careful. You better know what you're doing, because you have a high probability of getting burned. I'm seeing potentially 20, 30, even 40% value declines across these 5 states. Let's get into it. Number 5 is actually New York. New York State, which doesn't fit the typical profile of the state that I think is in a bubble. Largely, the wages have kept up with the values and the prices in New York over the last couple of years, but really what concerns me about New York State are the job losses. Nearly 8% of all jobs and employment has been eliminated since the start of the pandemic. That is the worst of any continental U.S. state. It's the worst recession. It's the worst jobs recession New York has ever experienced. And I think this is going to have a big negative impact on the New York housing market going forward. I don't necessarily think it's going to be like this flashy big crash that occurs over 2 to 3 years, but rather I think we're just going to see a decade of stagnation, a decade of prices not growing, of inching down year by year, no appreciation in a state like New York going forward. due to all the economic issues it is having. Now, our number 4 mega bubble has a much better economy than New York, and in fact, the economy in this state actually benefits from some of New York's issues. Our number 4 mega bubble is Florida. That's right, everyone. Home prices in Florida are up 27% over the last year. That's one of the highest in America, and that's even higher than Florida experienced in the 2005-2006 bubble. And that's going to make you concerned, especially when wages in Florida have only gone up 5% year over year. So we have a 27% increase in home prices and only a 5% increase in wages. That suggests that the local economy in Florida, while it's strong on a relative basis, is not growing enough to justify the massive increase in home prices we've seen. And I think Florida is also in a bubble, but I think like New York, it's not necessarily going to be a flashy, massive crash that occurs. This might be more of a long-term stagnation in the housing market rather than a 2 to 3 year blowout 30% decline. However, our number 3 mega bubble, this state I think could have that type of blowout decline over 2 to 3 years where prices go down very fast. There's lots of investors in this state. There's lots of speculators. There's lots of in and out migration, which in the short term is good for the housing market, but in the long run makes it unstable. Our number 3 mega bubble is Arizona. Prices in Arizona have gone up 31% over the last year compared to only 4% wage growth, everyone. That is unbelievable. Prices have gone up 27% more than wages, and while Arizona is one of the 4 states that have actually had positive job growth since the pandemic, yes, that's great, but jobs are only up 0.5%. That's not enough to justify the cavernous gulf we are seeing between prices and wages, which means locals in Arizona are completely priced out of the housing market, and it's going to be a big problem when the investors and the speculators go down. The locals aren't going to be able to afford the prices, and that's going to lead to a big crash. As it will in our number 2 mega bubble in America, this is a state where home prices have gone up 33% in a year. It's the biggest appreciation state in America. No other part of the country has had better growth in terms of home prices than Idaho, our number 2 mega bubble. And again, like Arizona, Idaho has actually had positive job growth since the pandemic, 2.2% increase in jobs over the last 21 months. But that's not enough to justify a 33% increase in prices when wages are only up 5.5%. Locals in Idaho are completely priced out of both the buying market and the rental market. We're seeing lots of people leave the state because of this, and I believe there's going to be a big, massive crash in Idaho, potentially 40% price decline over the next 3 or 4 years. Now, folks, are you ready for the big reveal, the number 1 mega bubble in America? And when we look at the data of home price growth, when we look at the underlying data points of jobs and wages, there is nothing fundamental that supports the housing boom that we've seen in this state. When you look at the data, I'm seeing big, massive price declines across Nevada. That is my number 1 mega bubble in early 2022. Home prices in Nevada are up 27% over the last year, while wages are only up 3.5%, everyone. Home prices up 27%, wages up 3%. The locals in Nevada are getting squeezed. They can't afford it. Meanwhile, jobs are actually down by 5% since the pandemic. Nevada has been one of the worst impacted economies in terms of job losses. Yes, there's recovery going on, but a 5% decline is massive in terms of a decline in employment and jobs. And it suggests, like, folks, what's actually supporting this Nevada housing market? Well, like Arizona, it's probably a lot of California people coming in. It's probably a lot of investors and speculators, which for a short time period can sustain the market. But when those people exit, when interest rates go up, when these California buyers find somewhere else to go, Nevada's housing market is going to be in for a big crash. Honorable mention as well to states like California, Texas, Utah, and Oregon. I think those states are in bubbles as well. Potentially not as big as the top 5, but places where prices can really go down. And I think it's important for you all to understand this. In the short term, right, say over a year or two, a housing market can be sustained by speculative forces. Investors coming in and buying up homes, speculators flipping homes. Short-term surges in migration and people moving around the country can sustain a housing market in the short term. term. But eventually, over the long run, fundamentals rule the day, and it's the amount of jobs and the wages that people are earning in a local economy that's going to dictate where home prices go. And the big problem we're seeing in America right now, in these states in particular, is that the prices and the price growth are not even close to supported by the jobs and the wages. And that means bubble, and that means crash. All right, everyone, if you enjoyed this video, if you want to see more of this content going forward, please make sure to smash that like button. Also, make sure to comment below. I want to hear what you think about this video. What do you think about these states in the mega bubbles? Do you agree? Do you disagree? What are you seeing on the ground as a home buyer in these states? When you guys comment, it makes these videos better. Additionally, make sure you're a subscriber. I come out with 3 of these data-driven videos a week, and now that all this crazy stuff is happening in the housing market and economy, you're going to want access to this real-time data. I'm going to be giving you access, so hit the subscribe button below. All right, everyone, until next time, this is Nick from Reventure Consulting signing off.